Welcome to Bloomberg Markets. I'm Scarlett Fu. Investors have been punishing big tech in favor of small caps this week as we await the Fed's decision and some critical earnings next week, while the SEC targets famed short seller Andrew Left. And Paris moves ahead with opening the Olympic Games even after an attack on the French rail system. More on the top stories of the day just ahead. But let's give you the setup for you in terms of where we stand with equity markets. The S&P 500 and NASDAQ 100 in recovery mode after 3 days of losses, while the Russell gains for a fourth time this week, up 1.3%. Everything's up about 1.3% right now. And Treasuries also gaining, with the 10-year yield moving lower today and on the week, right now at 4.20%. Let's get you some individual equity movers at midday. Bristol Myers rising the most in 10 years after announcing it'll join other big drug makers in raising its 2024 profit forecast. This after sales of all of Bristol's biggest products beat estimates, also helping Bristol's $20 billion purchases of 3 other drug makers last year. Meanwhile, 3M rallying the most since 1987. The company, which is under new management, also boosted its full-year profit forecast. The new CEO, Bill Brown, is prioritizing sales growth and increasing the pace of new product development. Let's also look at the NASDAQ 100 this week. The index swung wildly based on earnings, economic data, and election developments. So we want to talk about the big swings that we've seen in markets with Bloomberg's Isabel Lee. When we talk about the NASDAQ, Isabel, it's great to see you. Thank you so much for making time for us. Is it either a warning sign of things to come that we've seen a peak in big tech, or is this a buying opportunity? I feel like it really depends on your view on technology.
Exactly. There is no consensus. We saw such a wild, violent rotation this week. Wednesday, I'd like to hone in, was the worst day for the S&P and the NASDAQ going back to 2022. And that really started because of lukewarm earnings from Alphabet and Tesla. So the main question I've been asking people is this the end of the AI rally, and does this rotation have legs? And of course, depending on who you ask, you never really get a consensus. But then I think that's the interesting thing. Investors were now thinking, when are we going to get the ROI or the payout for these billions we've been pouring into artificial intelligence? I mean, yes, it's revolutionary. We have KKR, digital infrastructure head, saying that it's going to be bigger than the cloud, but it's not going to happen overnight. And I think that's what investors are seeing. Add to that is the Fed meeting next week.
Right, and of course we're going to get more earnings from the rest of the Mag 7 next week that might help to provide some answers. But I want to go to the Fed because I'm glad you bring that up. I feel like the catalyst for all this Fed talk really was June 11th, when the June CPI came in cooler than anticipated. It really cemented the idea that the Fed will move sooner rather than later, and it gave those small caps a big shot in the arm.
Yes, because as we know, lower interest rates would be beneficial for small caps because they're more economically sensitive, their balance sheets are a bit weaker. And so if the Fed cut rates, it will be a boost for them. I mean, for the longest time, we thought that big tech will see a bad year this year, but then AI rally happened, ChatGPT, so that's a different story altogether. But with the Fed, the consensus is they're going to cut in September, although we have the likes of former New York President Bill Dudley saying it might be in June because we're seeing the effects already of the Fed interest rate hikes. But it still remains to be seen. Honestly, some of the portfolio managers I talk to say it doesn't really matter. It's 25 basis points. June, September, it doesn't matter. What's important is the direction and that they're going to cut already. So now it's just really which month rather than will they cut.
Yeah, exactly. It's not if anymore, it's just when. So here's the other thing. I wonder how much political headlines are contributing to this rotation as well. We've had enormous amounts of headlines in the political world. The presidential debate at the end of June, the assassination attempt on former President Trump in mid-July, and now Biden stepping down, and Kamala Harris, the vice president, taking over as the presumptive nominee. How much is the Trump trade part of this greater rotation?
I wouldn't even say it's a big impact. And the thing is, when Trump trade depends on who you ask. It's different for everyone. And then throw in crypto. And Trump 2016 is different from Trump 2024. I mean, he wasn't even crypto friendly back then, but now he's slated to speak in the Bitcoin conference. I mean, I guess we can only write about it when he appears, but then there's that thing going on also. The main thing that investors are really watching is earnings. We have the continuation of 5 out of 7 next week, Microsoft, Apple, Amazon, and so that's a big thing. The politics, it's too early to tell. There are still 3 months down the line. Even the Fed, it's not really such a huge game changer in a sense that investors already have a consensus and have fully priced in September.
Yeah, all right, good stuff. Thank you so much. Isabel Lee, who covers markets for us here at Bloomberg. Let's stay with the markets overall because the SEC is suing short seller Andrew Left. The regulator accused him of committing fraud through stock trades, social media posts, and research reports, marking the agency's biggest move yet in a multi-year crackdown against traders who tout their bearish bets. Bloomberg's Bailey Lipschultz joins us now with more. So, Bailey, what is the SEC accusing Andrew Left of doing specifically?
There are a number of things, Scarlett. So the SEC and the Justice Department both have their own charges against Andrew Left. The thing that stands out from what we're seeing in the SEC complaint is that he would use social media to promote investments and lay out price targets, but then quickly profit from it. So if he came out with a short position or a short call on a certain company saying that the stock should drop 50%, he would actually, according to the allegations, load up on options or load up on a position and then quickly exit the position when the stock immediately reacted. So not sticking to those investments. So one of the examples it alleges is that Left would say he would stay long a stock until it hit $65 when, according to the SEC, they immediately began to sell the stock at $28. So profiting off of the immediate reaction as opposed to laying out a long-term thesis and sticking to it.
He just needed investors to jump on whatever he said, and then he would kind of quietly make his trades. There was also part of the complaint that said that he was teaming up with hedge funds.
And that's been a long part. So when you go back 3 years ago, when both the SEC and Justice Department were investigating kind of the network of short sellers, they were trying to figure out if these are actually research units and groups that operate individually or if they partner. And that's one of the things that was uncovered in the SEC complaint is that, in fact, they say the defendants had entered into compensation agreements with hedge funds. So whether they were letting them know trades before they actually came out with research or outright publishing other firms' research as their own to help move a stock.
And the SEC also uncovered some statements that really sound pretty damning, right, when it comes to Andrew Left, like making it clear that he knew exactly what he was doing, too.
And that's really, when you look through all the filings, in the SEC's complaint, it is not really becoming of Andrew Left, and it's going to be interesting to see if there is another shoe to drop and when that would happen, just because, again, this is going on 3 years of investigations. There is a large network of investors who are activist short sellers who promote their investments on social media, use their following to move stocks, and there is a potential fallout from that.
Right, there is a playbook to this. So have we reached out to Andrew Left? I mean, he's been dealing with this for a number of years now. What is he saying, if anything?
No immediate comment. So not hearing anything right now, which I don't believe should be a complete surprise, but he has talked to Bloomberg in the past and has kind of been a target after that GameStop snafu back in 2021, which he ended up falling under some pressure from that too.
All right, good stuff. Bailey, really appreciate you joining us, giving us the lowdown here on the SEC's lawsuit against Andrew Left, famed short seller. We do have some breaking news here, and it was expected that Warner Brothers is suing the NBA after TV rights were awarded to its rivals, in particular Amazon. Of course, we'll keep you posted on further developments. Amazon did have a bid that was approved by the NBA, and then Warner Brothers Discovery tried to match it, but the NBA made clear that it was going to move forward with Amazon's bid instead. So now we have legal action as a result. Meanwhile, in Paris, let's just go to the other side of the world here. The city is sticking to its Olympic Games opening ceremony in just under an hour, while authorities address a, quote, massive attack aimed at paralyzing the network of France's super fast trains. What happened was that fires were set off at 3 critical rail line nodes, impacting hundreds of thousands of passengers. Traffic on a small number of the impacted train lines have since resumed. There have been no official statements over who is responsible for these attacks. Bloomberg's Caroline Conan has more from Paris.
The Paris 2024 Olympics kick off on Friday night for the first time in real life after the pandemic kept spectators away from the Tokyo Games the last time. But just a few hours before the opening ceremony, the SNCF train network warned about some acts of sabotage on 3 parts of the TGV fast train lines, west of France, north of France and east of France, that could actually disrupt as many as 800,000 passengers going in and out of Paris. Of course, that's a big impact possibly on the opening ceremony. I was talking to the Accor Deputy CEO Danone, CEO earlier, 2 of the big Olympic sponsors, who say it's very sad that some people are trying to take the Olympics hostage, but hopefully it is not going to ruin the party. As many as 15,000 athletes from more than 200 countries have arrived in France and in Paris, including from Iran, North Korea, Israel. Those athletes from Israel have been placed under very high security. The Russian athletes will be able to compete, but individually, not representing their country. President Macron has called for an Olympic truce after 1 month of political uncertainty since the snap elections, and no new prime minister in sight yet. On Friday night, for the first time, the opening ceremony will take place not in a stadium but in the city along the Seine River, with as many as 6,000 athletes sailing down on boats, with a big finale at the base of the Eiffel Tower.
Our thanks to Caroline Conan in Paris. Need to work on my French accent there. All right, coming up, a private equity giant leans into gambling with a deal to buy game companies IGT and Everi. This is Bloomberg. It's time now for the stock of the hour, which is actually a twofer because we've got International Game Technology and Everi. Their shares are jumping after Apollo agreed to buy a part of IGT and all of Everi, which is a gambling machines company. The price tag, $6.3 billion. Joining us now for more is Bloomberg's Chris Palmieri in Los Angeles. Chris, what is Apollo's strategy in buying these two companies?
Well, so IGT was really the pioneer in the slot machine business in the U.S. They own that ubiquitous Wheel of Fortune game in casinos everywhere. But it was really not doing great. It had been bought by this Italian lottery company a few years ago. And the new industry darling was this Australian company called Aristocrat. It was really making all the exciting machines. And so they had come up with this idea to separate IGT business, and they cut this deal with Everi, a much smaller slot machine manufacturer. And Apollo, we had reported last year, was interested in IGT, and now just came and decided, well, we're just going to scoop them up. And obviously, they think they can do a better job than the current situation. Okay, and IGT may be selling its gaming division, but will still remain a publicly traded company, right? Yeah, I think they're not going to use the IGT name anymore, but it'll be the lottery business that existed before. Okay, got it. Thank you so much for clarifying all of that. I want to get your thoughts, too, on the breaking news that we just told you about moments ago, which is Warner Brothers Discovery suing the National Basketball Association after the TV rights were awarded to rivals. This is a multi-step thing, but let's just take you through it, right? Because there was this period where everyone could bid, and Amazon bid for one portion of the games, and the NBA accepted it, and Warner Brothers Discovery was able to match it, and it did, and the NBA decided to move forward with Amazon. So now Warner Brothers Discovery is suing over what? The NBA making a decision not to go with it? Right. Well, Warner Brothers is arguing that in their current contract, which expires next year, they pay a premium for the right to match a competing offer. Not an uncommon situation in these types of deals. What we're hearing the NBA is arguing or will likely argue, is that this isn't the same package that Warner Brothers had before. We kind of know why the NBA picked Amazon. For one, it's got a larger footprint of subscribers globally. It's obviously got a lot more money. And they just want to sort of go with this streaming partner in the future. But whether the contract is enforceable, that's something the court's going to ultimately decide, it looks like. All right, so we should mention Warner Brothers Discovery shares are higher at the moment by about 26 cents at $82.55. Chris Palmieri, thank you so much for clarifying all of that for us. Chris Palmieri on our stocks of the hour and the latest with WBD suing the NBA. Coming up, we're going to turn to real estate with venture capitalist Clelia Warburg Peters, who helped coin the term PropTech. This is Bloomberg.
This is the biggest single hosting event in the history of Airbnb. We have the number of people staying in an Airbnb here in Paris to fill the Olympic Stadium 5 times over. And they're spending over $1 billion when they're here in Paris.
That was Brian Chesky discussing the hype around the Paris Olympics. Brian Chesky, of course, founder of Airbnb. So let's bring in now Clelia Warburg Peters. She is managing partner at Era Ventures and our own Bloomberg's Abigail Doolittle. Clelia, you have called Airbnb the most successful property tech company, which is really an area that you know well, having helped coin the term PropTech. What did PropTech look like before Airbnb, if at all, and what does it look like now?
Yeah. So I think that PropTech was pretty nascent about a decade ago, which was around the time that Airbnb was being founded. There, of course, were companies like Zillow, Trulia, but the broader disruption of the real estate industry, which is, the industry driving the most GDP across every economy in the world, was really in its very, very early days at that time.
So in terms of PropTech, this spring we had Austin Allison, co-CEO of Picasso, who I know you know, and of course their other co-CEO, a founder of Zillow. He said that home sharing, co-sharing of homes is the American dream. Do you agree? And do you think that Picasso could be, I love how you're nodding your head there. It's hard to know if we agreed with that also. Yeah. Do you think that Picasso could potentially be, say, the next Airbnb or Zillow?
I mean, I think that Picasso is offering a really interesting innovation, allowing people to share, in particular, second homes. And I do think that we have an affordability crisis across this country, and that different innovations that allow people to access home ownership are really valuable. Now, whether or not home sharing is actually a realization of the broader American dream, I think that's a legitimate question mark.
Yeah.
But I do think, Picasso started out to allow people to share vacation homes. And I think for many people, Picasso could allow them to access something that wouldn't otherwise be available to them, which would be a home in another place outside of their primary residence.
Well, sticking with homes, but more on the residential side, of course, there was that massive NAR lawsuit, the commission lawsuit settlement, $418 million. I know some of the measures go into effect this August. Even ahead of that, have we already seen the death of the 6% commission, the perception of that it just doesn't exist anymore?
Yeah, I think this is going to be a really interesting question that we are going to live the answer to over the course of the next 6 to 12 months. I personally think that the settlement was less of a big deal than it's been made out to be. Really, the settlement was very kind of nuts and bolts, like here's the regulation about what can and cannot be displayed on MLSs and the types of agreements that buyers agents and sellers agents can make between themselves. The settlement did not in any way require that commissions come down. It just required that the bits and pieces of the transaction be tied up better. But I believe that the way that the media has covered news around the settlement and the perception now on the part of consumers that their commissions are going to come down, are going to kind of set up this standoff between the real estate industry and consumers that I do think is going to result ultimately in lower commissions. But I think they may be less low than the media is currently suggesting, because I think that there's really no requirement that real estate agents bring these commissions down. And that I think what you're going to see is that there will be a push on the part of many sellers to say, I don't want to pay this.
Right.
I'm going to list my home with the understanding that we won't pay a buyer's agent. And then there are going to be fewer people who come and see their home. And then they're going to moderate over time.
So there's a lot of things that kind of have to happen, and there's obviously a lot of confusion, as you put it. What does this mean for the housing portals like Zillow, like Redfin, which you could consider PropTech companies? Isn't this good for them because people will be going on those sites and looking for more information?
So Zillow, Redfin, those I think are some of the leading PropTech companies, right? But you have to think about what the different business models of those businesses actually are. So I think Zillow and Redfin are actually in distinctly different positions. A business like Zillow is really an advertising agency for buyer's agents. As you know, we think of Zillow as being a portal just to look at listings, but Zillow's business model is they're selling that lead traffic to buyer's agents. So if buyer's agents are suddenly in a worse position in the market, if they have less money, if you make less money as a buyer's agent, a portal like Zillow could actually be in a really compromised position. And that's part of why you've seen Zillow over the course of the past few years really push to diversify their offering to try to create offerings that are more focused on sellers and sellers agents.
And I should have mentioned before, the reason that we skipped to residential is you are the former president of Warburg Realty. In terms of the settlement and the changes that are going to come, and knowing that there's nothing official relative to commissions, what real changes will be affected? And if everything else remained equal, do you think that just that perception that commissions have already dropped, maybe not as much as the media is portraying or people think, do you think that it's going to have an actual effect on residential values?
I think we're going to have to see, and I think it will vary somewhat by market. So I think that this will probably impact luxury markets less, because I think that people in luxury markets are more used to working with professionals in different parts of their financial life, and that people will continue to be committed to working with really strong buyers and sellers agents in luxury markets. I think that in the middle market, the average American home worth generally around $300,000 right now. For a seller or buyer in that market, 6% is often equivalent to their entire life savings.
Yeah, wow.
So for them, that is a really meaningful difference. And I think you will see people really push more in that middle market segment to have commissions come down.
Our Ventures Managing Partner, Clelia, Warburg Peters, and Abigail Doolittle, thank you so much. That does it for Bloomberg Markets. This is Bloomberg.